And the company is also called Compendious Media Labs. So if you want to look me up, this is how you can find me. We are going to talk about crypto as an alternative investment. Alternative to what, essentially? I want to make, as I said, I want to make this session interactive. So maybe someone can answer that. What do we mean by an alternative investment? What are the traditional investments? What do you understand by that?
Share market and FD.
Share market, FD, great. Money,
Mhm.
Sanjay said, right?
Real
What
estate.
else?
Keeping the money
Sorry?
in banks,
Real estate.
keep money
Um,
in banks through RD,
Keeping,
FD.
exactly, RDs, FDs,
Gold,
um,
gold, real
gold,
estate, property.
great. Real estate, property, SIP, great, great.
Yes.
Traditional investment. I'm glad that there is that much understanding of it. Um, so has anyone here actually invested in cryptocurrencies before, or have they even thought about it, or are you all not aware of it at all?
I have done it.
I've done it also.
Great. So you guys did it. Why do you need me? See, you have so many people who've already done it. Um, right. I'm so happy that people have already experimented with cryptocurrencies. So yes, the traditional investment names were correct. It's FDs, stock market, mutual funds, basically gold, property, whatever we know as an investment that our parents have done, right? And crypto as an alternative investment is just cryptocurrencies is a new market where people have now started looking into investing money in it, right? So, but it is risky, right? So my agenda of the call is to sort of give you guys a guidance on why it is risky and why it is still worth it, right? At the end of the day, it is still a decision that you have to make on your own accord. So this is not a financial advice, but I do want to present a case for cryptocurrencies to ensure that the generation that we are going to get in the future are very well aware of it from the early days. So this is what I tweeted today. When we set up this call, crypto was, I think Bitcoin was trading at $45,000, and today it has touched about $35,000 or 34,000. And in the last 24 hours or so, Bitcoin and other crypto markets have dumped about 20-25% overall. So I tweeted this at 3:39 today, that I'm going to give a lecture to college students as crypto as an alternative investment. And what am I supposed to say now? Because if they're going to open the screens now, crypto is going to look horrible. Uh, right. So buy the dip, someone says here. So there is a theory in cryptocurrency that the markets are always going to be volatile. So every time it dips, like the market dips significantly high, buy it. So buy the dip is what the sentiment is around that. So I tweeted this as a joke, but I got a lot of responses. Let's not get into that. Let's actually understand, money and why cryptocurrencies are the new innovation and important and are here to stay, right? So in the sort of early days, like thousands of years ago, the first currency or the first way of exchange of goods was using barter. I have rice, you have wheat, I give you rice, you give me wheat, and we've done a barter system, right? Even before that, I had fish. If I was like, living near an ocean and you were living in the mainland, you'll probably have, meat. So we come with fish, you give us meat, and I give you fish. And that was sort of the barter system that was there existing. But there are problems with barter system. What if I have fish to offer, but you don't want fish, right? And you want something else, or I don't want rice, or I don't want whatever it is that the other person has to offer. We don't want it. That was the limitation of barter. The other limitation of barter was storage and transportation, right? Things go bad. These are all perishable items. So how do we ensure that it stays good and we can still transport it for months and months across the sea or somewhere like that, right? So barter system had its limitation. the next thing we understood as money was gold and silver, precious metals basically. We started exchanging goods for in exchange for gold and silver, and that became the currency. Now again, the same problems arise. How do you store gold? How do you keep it safe? And how do you ensure smaller denominations for smaller exchange of gold? Right. Then we moved on to metal coins, like gold coins, silver coins, and slowly the coins also started leaving value. They became like aluminum coins and all, and paper money and plastic cards. All of us here have used all these means of exchange, right? We have used metal coins, we've used paper money, we've used cards, and we've used electronic money like Paytm and Freecharge and all of those things, right? So all of this was it's a very it's the last 300 years of evolution of money, where we've moved on to coins and paper money and plastic cards and electronic money. But in the last 10 years or so, 10 to 12 years, we've been introduced with a phenomenon called cryptocurrency, right? And it is still a digital form of money. I mean, you can't see it, you can't touch it, it's intangible, and you can just transfer it from one place to another, and you need internet connection to make this transfer. So it's still digital money, but it is an evolution in money, and we will talk about that again now, right? So we'll take a pause here, and let me ask you guys, how many of you know what Indian national rupees, INR, right, is backed by? Like, how does a note derive value? Or how does a US dollar derive value? Can anybody answer that? You can even type it in the chat if you don't want to talk.
I think it's based on the gold, like
Okay.
in terms of gold.
So if I have a 2000 rupee note, there is 2000 rupees worth of gold sitting somewhere, right? Or there is someone is asking, what do I mean by that question? So what I mean is that if I have a 2000 rupee note, I have a 500 rupee note, what ensures that this note is worth 500 rupees? How does this have value? Right? And someone is saying RBI stores gold in a place, which is equivalent to every penny that is printed. I think now is on import, export, and monetary policy, right? All of these answers are partially correct, right? So let me try and explain it. Earlier, in the US, the dollars that were printed were all backed by gold, right? So I'm talking about the 1900s, 1800s, right? Every US dollar was backed by gold. So if there is a $5 note, that means that there is essentially somewhere in a vault $5 worth of gold is being stored at the moment. It was called the gold standard, right? Karan is right here. Then the US went away from the gold standard. So what does it mean that they went away from the gold standard? Basically, whatever notes were being printed were now not backed by anything. The government could print, the federal bank, as they say it over there, could print as many dollars as you want without having to back it by anything. So today, during the pandemic, the US printed about $6 trillion, not printed, in digital form also they can take out, without having to back it by anything, right? And this is done to sort of keep the economy churning. It's not a bad thing essentially to print more money. It is bad when you print a lot of money, right, without backing it up. So they keep on churning this money without anything backed by it. And slowly even India moved away from the gold standard. So right now, India has about 200 tons of gold, and that's it, like 200 into 1,000. That's it, 2 lakh, kilos of gold sitting in the vaults, and that's it. The rest of our currency is essentially also a fiat currency. Fiat currency means it is not backed by anything. However, the Indian economy is stronger because we have $680 billion worth of forex reserves, which means that we have foreign currencies with the RBI to ensure that in times of high inflation or something, we have ourselves protected, our money is protected that way. But that's just a little bit of it. We still have a lot more money in circulation. And if you open your notes and you read inside, it's, I promise to pay the bearer the sum of 500 rupees. So essentially, this note is just a promise by the governor of the RBI, Reserve Bank of India. If you have this note, the Reserve Bank is promising that it is worth 500 rupees. It is not backed by anything except for this promise. Similarly, the US dollar is not backed by anything, right? Why am I telling you this? The reason money is not backed by anything is to help free flow of it, right? Easy flow of money. But what it leads to in the longer term is inflation, right? I grew up in the 90s. I had a dairy milk chocolate almost every day, and my teeth were really bad. But I used to spend 5 rupees on a chocolate that used to be this big, right? Today, I don't see any chocolate that is worth 5 rupees and it's this big. So that's my inflation. Today, dairy milk is going to cost, this big dairy milk is going to cost me 20 rupees. That's 4 times the original price, and in the span of just 20 years. So in 20 years, the cost of a chocolate has gone up 4 times for me. Plus the production cost has reduced, right? The automation has come in. The chocolate raw material is now cheaper, and the quality has changed. So originally, the 5 rupee chocolate should have been cheaper for me because of the automation and the market difference, right? But it's still more expensive for me, and that's inflation. We see that in the longer run, when you keep on printing money, the value of money reduces. When you have a lot of money, when you have a lot of money, you are rich. But if everyone in the neighborhood has the same amount of money, you are essentially middle class, right? You're not very rich. So that's the problem with money becoming, unbacked or not backed by anything and just being printed everywhere. That's the problem that the world is facing right now as well. So what are the ways to solve this problem? That's where digital currencies in form of cryptocurrencies came in. Bitcoin was the first cryptocurrency, and Bitcoin essentially is right now a limited amount of cryptocurrency, right? So there can only be 21 million Bitcoins. There's 2.1 crore Bitcoins, and 1.8 crore are already in circulation, and the rest 1.9 crore are already in circulation. The rest 20 lakhs will come out in circulation in the next 100 years. So there will always be only 2.1 crore Bitcoins. So what we have solved as a problem here is that we cannot just print money anymore, right? We are solving that problem which the notes have to offer to us. So we cannot just print money anymore. There is an algorithm. It is the only way that Bitcoin will come out, and most of the cryptocurrencies sort of follow more or less this way of fixed quantity of the cryptocurrencies that exist, so that it doesn't inflate or it doesn't create inflation in the longer run. So that's the one problem we solved. The second problem with money as it exists today is that it can be manipulated. It can be, you can lose the value of money just because on a whim, some authority decides to do something about it, right? We've seen news like, so I think I'm going to talk about this now. So we've seen news like, RBI putting restrictions on banks and the amount of withdrawal that it can allow to its users. So now let's say that RBI is earlier put restrictions on PMLA Bank, Punjab, Maharashtra Commercial Bank, that a user can only withdraw 10,000 rupees and that's it. So what if I have 2 lakh rupees in that bank account? I can only withdraw 10,000. Essentially, 95% of my money now becomes useless for me because I cannot withdraw it, right? So that's called censorship. Government and authorities can come in and take away your money because it's centralized. They have control over your money, right? Today, if you have money in Paytm and Paytm goes down, you cannot access your money. You have money in a bank account. If a bank goes down, you cannot access your money. So that's the other problem that we had to solve, right? So Bitcoin and cryptocurrency solve that problem by saying that you are responsible for your coins, right? You have to take control of them. You have to make the transfers, and essentially you are going to hold them and keeping them secure. So consider a situation wherein you have cash, a lot of cash, and in your house, and you keep it in a safe. So now, inside a safe, you are responsible to keep it locked, keep it hidden, keep it safe. If somebody takes away your safe, then your money is gone, right? So we've converted cash, which is currently the purest form of uncensorable money, because you can just go and give cash to anybody, and nobody can take it away from you. The government cannot easily know or take it away from you. The banks cannot control that cash. It's in your hand. We've taken that cash and made it digital in form of cryptocurrencies. So now in Bitcoin and Ethereum and all those cryptocurrencies, you are holding your coins, which nobody can take away from you. Nobody can censor it, and you can send it to anybody. So that's the other problem with money that cryptocurrency solves, right? Which is take away the central authority, resistance on top of it. So you've taken out, you've made your money digital, you've made your money inflation proof by keeping it limited quantity, and you've allowed people to hold their money into their own hands without allowing them to be censored by the authorities or other bad actors in the system. So now what do we do? Now there's only one thing. How do we make a transfer of cryptocurrencies? If I want to send it to Shreyas or Nikhil here or Karan, how do I send it from one person to another, right? And that's right now. If you want to do it with your bank accounts, the bank is essentially taking care of it. If you make a transfer, you swipe your card, the bank is checking if you have enough money in your bank account. It removes that much money from your bank account, and it adds that much money to the recipient's bank account, right? That's the way the bank is doing it. In cryptocurrencies, you want to remove banks. You don't want control by any authority. So all the people like you and me, we all run a computer. It's called a miner. That is going to go and ensure, and it has a copy of all the transactions that are happening in the Bitcoin or in the cryptocurrency network, whatever cryptocurrency it is. It is going to make these notes, like thousands of computers holding the same copy of the ledger, is going to check. If I want to send one Bitcoin to Shreyas, it's going to check if I actually have one Bitcoin in my account. It is going to take that Bitcoin out of my account, move it to Shreyas's account. And that's just not one authority checking it or one person checking it. That's thousands of computers making the same check, so that that transaction can be validated. So now you've made your currency digital, you've made it controllable by you, and you've essentially made the transfers verified by thousands of computers around the world. So there is no way that it can be hacked. Because if you want to control something, or if you want to change something that is controlled by thousands of computers, you need at least more than half of the computers in your control. And that's a lot of power. So that's how cryptocurrencies originated as an idea, as a currency, as a digital cash, which is controlled by you, and the transfers are all peer-to-peer without the intervention of an authority on top of it. So that's the basic of why cryptocurrencies were created. Why one invests in it is what we are going to discuss now. But I think I have a question. If the total amount of Bitcoin is fixed, then how the value of Bitcoin changes every day? Great question. The total amount of Bitcoin is fixed, but the supply and demand of it changes. So when there is a lot of demand for it, the price gets higher. Then when there is less demand for it, people start selling, so it goes down in value. That's the value. Like there is a limited supply of gold, but the price of gold keeps on increasing over time. Also reduces when there is a lot less demand. So that's how the market moves. Any market, basically, right? it's not $21 million, it's just 21 million Bitcoins. It's not exactly equal to $21 million. One Bitcoin is equal to $35,000. There can only be 21 million Bitcoins, and each Bitcoin has its own value depending on who wants to pay how much to buy that Bitcoin from the other person. So it's more of a market supply and demand part. Right? Now, I've explained Bitcoin to you because Bitcoin is one of the first cryptocurrencies. There are now thousands of cryptocurrencies. And if you understand Bitcoin and if you get into it, and you have to then slowly learn more about other cryptocurrencies and learn why it suits your preference of investment. Right? Okay. We'll come to the trading aspect of it in a bit, why the price fluctuates and all in a bit. Okay. I think there's a lot of question for that. Now, I'm just going to tell you why I invest in cryptocurrencies, and it is up to you to find out your reason to invest in cryptocurrencies, right? So first of all, as I said, I have a lack of trust in the existing system. Now, if the government can print, if the RBI can print as many rupees as they want, if the federal bank can print as many dollars as they want, I can see that I'm losing value of my rupees as we go into the future. So most of the people will invest in traditional assets, right? Stock market or mutual fund or even FDs, right? So that they can increase the value of money over time. I invest in cryptocurrencies a little bit of money because I believe that it can have higher returns than all of these things that are in the traditional market. So that's why I would invest in cryptocurrencies. I also invest in Bitcoin and cryptocurrencies as a store of value. Now I've explained why it is a good type of money, but now we have to talk about why it is a good type of store of value. By store of value, it means that today you put value in it, you put your money in it, and it's a good store of that much money. It will in the longer run, it will only increase. That's the belief you have, right? That's why you put money in gold. That in the long time, it is going to increase only. So gold is a great store of value. And I consider Bitcoin to be a store of value as well. Now it's also an experiment. So I always tell people like you, younger people, that you should take risk of investing in cryptocurrencies, but you should not put all your money into it. Only put enough money that you can afford to lose, right? Let's say you have 1 lakh rupees. 5,000 or 10,000 of that rupees you can put in cryptocurrencies, 5 or 10%. If that 5 or 10,000 is going to go down in value tomorrow, you will not be hurt financially. You will not be hurt mentally. But if you put 1 lakh rupees and tomorrow the market goes down 25% or 30%, you've lost 30% of your total net worth, which is a bad thing. Excuse me. So you should only invest what you can afford to lose, little money, because it's also very experimental and it's also very risky, right? Bitcoin has a decade of, sort of backing now. It started in 2008. Today we are in 2022. So we know that it has survived all these markets and seems to be, a good investment. So that's why I invest in it. And yeah, it's nascent technology. We should all sort of, we are the future of the country. We are also young, and we understand we need to focus on the technology that will change the future of the world, right? Not technologies that are existing for over 30, 40 years, because it has to upgrade and it has to change. So digital money has been existing. Credit cards have been existing for 30, 40 years, 50 years even. This is more nascent, more new. So I invest in it because it's a newer technology. And obviously, ultimately, I also want to be rich. I think that crypto is a very risky investment, but it is also a very fast growing industry. So the amount of money I put in stocks versus crypto might grow grow higher than how much a stock market would give me return in, say, in the next 10 years. These are my reasons to invest in cryptocurrencies. And now we'll get into the market part and all. So let me show you this picture. Okay, today all of the cryptocurrencies were in red. By red I mean the price went down. right? Bitcoin was down about 10%. It further went down than this. I took a screenshot earlier. Ethereum, the second one, ETH, was down by 15%. Then there are other smaller coins. Whatever you see as green are just stable coins. By stable coin, I mean their value remains to $1. So that's why they are green. Everything that is supposed to be volatile has gone down today. Okay? So that's the risk of crypto. It could make you rich in like 1 year, and then in the next year you could be looking at losses, and then in the next year you could again become rich on paper. So when you invest in cryptocurrencies, you have to sort of remember that it's a long-term game, right? It might not be a 50-year game, but it is still a 5 to 10 year horizon game. And you have to slowly invest in cryptocurrencies, slowly understand the technology, and then only decide to sort of get into it. Because if you're going to just to get rich quickly, you're going to lose money. I think the people who have invested in crypto in this group might attest to that. If you guys invested in sort of in FOMO, like fear of missing out because everyone around you was getting rich and investing, you probably are looking at a loss. Am I right, Nikhil? I think a lot of people invested in crypto, right? Some of them can answer that.
Hi, Nimish.
Yeah, hi Siddharth.
Hi, Siddharth over here. So I invested in crypto, and so I see a total red uh, in my account. So and am I allowed to ask a couple of questions as well with
Sure.
this, or
Go on,
yeah?
go on. Yeah.
So first, I just wanted to know, why is this red? Why are you seeing this red in this crypto market? Okay, that's one question. And then the other question is, see, there are ways to value, stocks, mutual funds, real estate. How do we value these cryptocurrencies and crypto assets, especially now that there are so many altcoins, so many coins in the in the market, right? So how do we value them?
Great
Uh,
question.
Third, okay, I have a couple of more, but can I ask them as well at a
Go
go, or is
on.
it?
I can answer how much I can. Yeah, I'll answer whatever I
Yeah,
can.
yeah,
Yeah.
sure. And okay, so the next question is that, see, Bitcoin is inflation proof because, as we say, there is limited supply of Bitcoin, right? How about other coins like Ethereum, Solana, because what I understand is there is no such limit on them, right? You can
Okay.
mine as
Yeah.
much as you want. And
Yeah.
then the last
Okay.
one is, what are the systemic changes that have to happen for Bitcoin and all these coins to act as a currency? Because currently what I see them as is a speculative asset rather than
Yeah.
more of as like a currency. So
Mhm.
yeah, these are the questions, and if there are any more, I'll
Great.
ping you on Instagram. Yeah, thanks.
Yeah. All right. So I think a lot of people have the same questions. I'm going to just quickly finish this off. I wanted to tell you why or how Bitcoin started and why it is important. I wanted to tell you why I invest in it. I wanted to tell you how risky it is, which we are talking about right now. It can overnight go down a lot. And lastly, I wanted to tell you that if you are ever thinking of investing in cryptocurrency, it's better to invest than to trade. And by trade, I mean, don't put in money thinking 3 months में या 1 month में, in 1 month or 3 months, it's gonna increase in value, so I'm going to sell it. Or in 2 days, it's going to increase in value, so I'm going to sell it and make a profit, and then buy it when it goes down, and then sell it when it goes up. Don't try to do that. Because cryptocurrencies are a 24/7 market. You might be asleep and you'll wake up to a market which is completely unexpected. So don't try to do it. Like, if you are going to invest in cryptocurrencies, the best way to invest is to invest a little money every few days, right? It's called SIP. You can call it SIP. You can call it dollar cost averaging or rupee cost averaging. You are essentially averaging out the price of cryptocurrencies that you invest in. So today, if Bitcoin is at 30 lakhs, you invested 3,000 rupees in it. Tomorrow, when Bitcoin is 25 lakhs, you invest another 3,000 to bring your average cost of purchase down. So in the long run, you'll make more profit that way. So always invest, do not trade. That's my advice. This is a financial advice. Always invest, do not trade. Okay, do not trade. And yeah, lastly, there are memes like this you can find, like, I could be 21 and I would look like that if I am trading cryptocurrencies for sure. So there's no sleeping if you are trading cryptocurrencies, right? Um, yeah, I will get into how to invest in cryptocurrencies in a bit. We'll open up for questions. There are a lot of them actually. We'll start with Soumyajit and Rahul's question around how does the demand or cryptocurrencies demand and all is identified, right? Mm. So let's say that if a country today decides that it's currently based on less on fundamentals and more on news. What I mean by that is if a country decides to legalize cryptocurrencies, right, in their country, like El Salvador did in September 2021. That is a good sign for cryptocurrencies adoption in the long run. If country is accepting Bitcoin, while other countries are fighting if they want to ban it or not. So it's a good sign that a country is accepting Bitcoin. So essentially, people are going to start investing in it, thinking that if something goes wrong, I can always go to El Salvador and get the most of my crypto's value. So that's a good sign. Right? That's a good news. Elon Musk coming out and saying that Tesla is going to accept payment in Bitcoin. That's a good news. That's why cryptocurrency's price goes up. Elon Musk coming out and saying that Tesla is going to stop accepting payments in Bitcoin. That's bad news. So a lot of people start, sort of not avoid investing in cryptocurrencies, because if a company if the richest man in the world, Elon Musk, is not in favor of Bitcoin, maybe we shouldn't be as well. So that's the news cycle that drives the price and demand and all, most of the time with cryptocurrencies. People who invest in cryptocurrencies believe that this is not the time for it. There is still 10-20 years in the horizon where we will see crypto to be very, very mainstream, right? Everybody will be accepting cryptocurrencies. Everybody will be investing in it. Yeah. So they invest with that horizon in mind, that in the 10 years time, we will see a lot of crypto will be mainstream. So today investing in it is a good decision to invest right now, because in the future it will have a lot more value. Now, coming to Siddharth's question, right? There are ways to value conventional assets like real estate, mutual funds, stocks. How do we value cryptocurrencies? Okay, there are ways to value real estate, mutual funds, stocks, because someone decided to make that a metrics to value it, right? And then it was accepted by the larger population as a metrics to value it. But today, even today, Netflix just in. Oops, my Siri. Okay, Netflix. How many of you do know? I don't know, but Netflix went down like 20% yesterday after they announced that there is a reduction in the growth of their subscriber base. So not a lot of people are subscribing to Netflix anymore. So that news was just news. They just said that we've not met our growth projections. So our subscriber base is reducing. It's not growing as fast, and it made people sell Netflix, and it went down 20 to 25% in just one day. So how do you essentially value any stock by that measure, right? It can change its value by the sentiment of people. So in that same sense, if there is belief in cryptocurrencies, if I sit here and I believe that tomorrow I want a store of value where I put my money that is uncensorable, I want to move out of this country tomorrow. Not India is not going to go through a civil crisis, but maybe if I was in Venezuela or Zimbabwe, where there is a civil unrest because of inflation, I want to move out of that country. I cannot carry gold with me because it can be seized. I want to carry the same value out of this country, and Bitcoin will fix this because it's just a digital asset. It's in a digital form. So you can take it out of the country without anyone finding out, without anyone censoring it, without anyone seizing your value. I see value in Bitcoin in that sense. So for me, I'm going to invest in it because I see value in it like that. Ethereum is a platform On top of Ethereum, you can build decentralized applications. The same applications, games, and everything that you play otherwise are all centralized, are all controlled by one entity, right? PUBG is controlled by PUBG India or whatever the company is behind it. But if you make something on top of Ethereum as a cryptocurrency network, on top of it, if you make it, it's going to be controlled by thousands of computers around the world who are essentially running the software. So, do you believe that in the future, people are going to play games that are controlled by thousands of miners, or people are going to play games which are controlled by one single entity? If you believe that the future is the first one, then you're going to invest in cryptocurrencies thinking about that. That's how you essentially put a value to the network or to the cryptocurrencies. If it suits your vision of the future, that's your investment strategy. I think I've answered that question fairly. Bitcoin is inflation proof because of its limited supply. But how are cryptocurrencies inflation proof? This is a slightly harder topic to get into. See, we have to, as I said, like Ethereum earlier, in the beginning, like you gave an example of Ethereum. Ethereum is another cryptocurrency. It has no fixed supply. It can continuously generate Ethereum in the future as well. But now, Ethereum introduced an update where a part of Ethereum are removed from the circulating supply with every transaction. So what we've done is we had this continuous inflow of Ethereum going up, and now we have reduced, we are slowly removing Ethereum from circulation. So we've moved into this straight line where new Ethereum is generated and old ones is taking out of the circulation, slowly going down where more Ethereum will be taken out of the circulation than they'll be brought into the market. So these are like companies, right? They upgrade over time, and you have to understand that they are all working towards stabilizing the value of the token or coin that they have. So they all come up with plans to reduce the supply and make it inflation. I'll take the systemic changes later on. What are the parameters by which we can shortlist altcoins to invest? Kindly mention reliable sources for analysis. And yeah, so now the real question is that why, if you decide to invest in cryptocurrencies, where should you invest the money, right? And what you should do. And to be honest, neither me nor anybody is a good guide to tell you where you should invest your money. It's a decision that you need to make on your own. So now, if you want to identify as to or learn more about a certain cryptocurrency, you can always go to their website and learn more about them. But if you have to sort of ask me as to where I can go and learn more, go to sites like CoinMarketCap or CoinGecko or essentially the aggregator sites. Know what are the cryptocurrencies on top 10 list, top 20, top 100. Learn about each one and see if it fits with your understanding of the future. If you think that the future is going to be a certain way and this cryptocurrency or this altcoin is going to benefit from where we are going, which direction we are going, only then you have to invest in it. Otherwise, stay away from it. My advice, start with Bitcoin, stick to Bitcoin for 6 months, see the market movements, and then slowly learn more about other coins and then slowly invest in other coins. That's my advice to you guys if you're going to get into cryptocurrencies. What are the parameters that we should check though? Check if actually the people who are building it are, check whether if the people that are sort of building it are also, sort of people who, like check the team. Basically what I'm saying is that check the team, if they are legit people, if they're actually building something good, if they have good experience in the past, if they have a good history in the past. Don't go with something that your friend is buying. Go and check the team behind the project. Check the roadmap of the project, what they are planning to build in the future. Is that even possible? Again, if it sits in your vision of the future, only then go and invest in it, right? What are the systemic changes that have to happen for Bitcoin and Ethereum to become currency and not a speculative asset? Look, Gold was a currency once, and then it became a store of value. So there are no systemic changes that can happen. This is just natural progression. Something starts as a currency and then becomes a store of value because a lot of people believe that selling it would not be worth its value. So they want to keep it, they want to store it. So I don't think that from here onwards we can see cryptocurrencies becoming currencies. I think that cryptocurrencies will be a parallel economy, a parallel investment, and the local currencies like rupees and dollars and all will be the true currencies that will keep on circulating. So there are no systemic changes needed. It's just a natural progression. It started as a currency, now it's an asset, and now it probably will remain an asset. Right? What's the reason for the dip in the crypto market? I don't know. If you go to Google and search why the crypto market dips, you'll find 20 articles. One of them is going to be, all of them are speculative, but one of them is going to have more, truth than the other ones, or more likelihood than the other ones. But there could be many reasons. Russia deciding to, trying to ban cryptocurrencies. U.S. Federal Bank, announcing taking off, reducing the rates of interest on the market. No more quantitative easing. These are all really big words. Even I don't understand all of it. But basically, monetary policies in the countries can be a good driver for cryptocurrencies interest. And once it goes down a little bit, then people just begin to panic and start selling it, right? So it goes up in an escalator and it comes down in an elevator. So people panic sell and then they get out of it as soon as they can. I want to use 5 more minutes to sort of acquaint you with the process of how crypto trading or crypto investment happens in India. You have about a dozen exchanges in India. CoinDCX, CoinSwitch, and Vault, and BitBNS, and WazirX, and Geotus, and I think half a dozen exchanges, good exchanges in India. You have to sign up with your email or your phone number. You have to complete KYC. You have to give them your PAN card details. You have to give them your Aadhaar details. You have to give them your bank account details. Basically, complete your KYC. You have to take INR from your bank, deposit it into the exchange. There you will start seeing your INR balance as soon as it's deposited. Then you can use that INR to buy cryptocurrency or basically buy Bitcoin or any other cryptocurrency. And multiple types of orders are there. You can go and buy them. And then whenever you feel like, you're done with it or you want to sell it, you can sell, or you can put in more money and invest more. It's a natural progression of how you have to invest in cryptocurrencies. I think, I don't want to name names, but on CoinCrunch, you can go to youtube.com and just search for CoinCrunch, and you will see our channel, and you can see reviews of multiple exchanges on our channel. You can go find that playlist, and you can check and decide for yourself where you want to invest or how you want to invest in cryptocurrencies. But yeah, that's pretty much what I had to share with you. My goal of the session was to teach you how we came to Bitcoin, or how Bitcoin came into existence and why it is important. I want to still say that do not go all in on cryptocurrencies. Invest only a little bit. Invest a little bit till you understand it completely, and only then decide to invest more money in it, right? Would there be a general long-term uptrend? For the past 12 years, cryptocurrency in general has been on an uptrend, right? So it's growing. It was nothing in 2009. It was something in 2013, 14, and now it's like the market has like been crazy, right? With mainstream companies getting into cryptocurrencies. We have Adidas and Prada getting into NFTs. We have, Tesla accepting Dogecoin as a payment for merchandise. We have Michael Saylor, public companies now putting Bitcoin on their balance sheets. We have countries that have legalized cryptocurrencies, countries that are buying cryptocurrencies and keeping, Bitcoin as their primary currency. So we've come to a very, very good, time. So in general, I'm very optimistic about cryptocurrencies. probably investing 100 rupees now are not going to become 10,000 very soon, but that time is probably gone. But 100 can become 200 in say a year, two, maybe even 4 years, right? That's a very short time to double your money. Um, Again, not a financial advice, but you have in the long run. I do feel that we are in a continuous uptrend. Could you do a sessions on NFTs as well? I'm not. I don't understand NFTs as well as some of the people who are in the art segment do. So I shouldn't be I am not the greatest guest for talking about NFTs, but we do have some time. I just want to say, if you guys have invested in NFTs, what you have done is essentially bought a certificate that is pointing to a digital art stored somewhere. So that digital art can also be replicated. That can be, screenshotted and taken away, but there could be unlimited copies of it. That's just a digital art. But what you hold as an NFT is the certificate that the original copy of the art belongs to you. And that's it. That's what is an NFT. Okay, so all the hype around it, I don't personally understand it. It's not that great, but to each their own. If there are people who want to engage with NFTs, there is a market for it. So it's popular that way. Any other questions, guys? We have about 5 more minutes. Sorry, I have a bad throat today. But yeah. Nitin Gupta is saying, Naimish sir, big fan. I just want to clarify to the audience here. He is my head of operations at CoinCrunch. So he's like, no, I work with him. So thank you. Thanks for doing this, Naimish. You're welcome. I think we need to bring back Ankita. Ankita, can you take over?
Thank you, sir, for sharing your valuable concepts and insights with us today. I'm sure everyone present here is taking home some valuable learnings. Thank you all for being such an amazing and active audience. Please fill the Google form if you haven't, because that's how you'll be getting your certificates. So
There's a certificate. Can I fill it?
Yes, sir.
Certificate as well?
Yes,
what kind of certificate do I get? Do I get like a certificate that says I was a speaker or I was an attendee?
So we will be more than happy to give you both.
Okay, maybe we should make these certificates on NFTs. Okay, I'm just joking. Is there any internship available? Okay, yeah, guys, if you are willing to learn, like intern in a cryptocurrency news company, we are always open. Nitin, there you saw Nitin. You can contact him. And he's gonna take in applications. If you really want to get into cryptocurrencies, we make you work very hard. Okay, so be sure that you are ready for it. If you want to do internships with us, very, very, very open to it. Yeah, Nitin's email ID is nitin@coincrunch.india, coincrunch.in. So you can reach out to him. Yeah, Ankita, thank you so much for the time. Thank you, Cerebro Team.
Thank you very much, sir. Yash, if you're listening, you may stop the recording and save it.
Okay. We can upload this recording somewhere. Are we going to?
So we'll upload it on our main social media platforms, specifically LinkedIn.
Oh, yeah. I hate LinkedIn. Guys, if you want to follow me, I'm on Twitter. Don't follow me on LinkedIn. Okay, I will never respond to you on LinkedIn. I was just sharing my screen. My Twitter is that Naimish, and CoinCrunch Twitter is CoinCrunch in. If you want to get the latest news on cryptocurrencies, follow CoinCrunch in. If you want to, see me shit post, then you can follow me on that Naimish on Twitter. So I'm mostly on Twitter. I answer all the queries on Twitter, almost all the queries on Twitter. So, and there is my email address as well. But Twitter is better than my email address. Okay. Sorry, again, Ankita was trying to wrap it up and I kind of took over. Sorry, Ankita. Go on.